Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. A short video on short squeeze trade setup on spot crude today. Just going back through and looking at our pairs. We're on day 2 and we're in strongly trending markets. And that being the case, not really seeing anything ideal as we are still on the front side of these long trades. I know traders who traded London had opportunities for continuation, excellent continuation trades coming out of the Asian session into the open of Europe. Euro, again, continuing its strongly bullish upward market. After, obviously, PPI, there was a short opportunity at the high of the day, but I'm reluctant right at this point to counter trend. I'm looking for markets that potentially are going to be maybe easier setups, as these were with trading with the trend on day 2 back through the high of the week in the London session. But we're up high and shorting into this. Great opportunity, just not what I would consider to be a 5-star opportunity, and just reluctant to counter trend on these markets. Same thing with the pound. We have a parabolic, again comparing the two. We have a geometrical high-low on the euro. The news catalyst takes out the high, pins through the high, and then on a shorter time frame, obviously traders had the opportunity to short that market back down. On the parabolic setup, a little bit different. Again, you're ramped up and blowing off, and not the same high-low structure as the euro. NASDAQ, again, an example of the news being a catalyst in a parabolic setup on day 2, continuing the long trend, blowing off in the direction of the trend on the news. Again, just not wanting to position myself in front of the news, and not too keen on counter trending these markets, especially the indexes. Same situation on the US 500. We have our day 1 taking out the high of Friday, and our day 2 inside the parabolic, slow consolidating, creeping trend, blowing off in the direction of that market, moving higher through the high of the week. Japanese yen, the US crosses are on the downward side. We had excellent shorting opportunities on day 2 heading into the London session. Japanese yen. Canadian dollar is in a consolidation. Again, nothing ideal. We're still in a downward moving market, but we just have consolidated volume opportunities at the low after hitting the low of the week. But again, just not a real, what I would consider to be a 5-star opportunity. Swiss franc coming back to Monday, day 1, day 2, a great short opportunity headed into the Europe window, a nice consolidation. You can look at your own charts. Just giving you my rationale heading into the US window with PPI on the calendar. Again, an example, low of the week, day 1, day 2, day 3. We talked about the reset. So again, go study the Fridays. Last week we have volume that collected and formed a peak formation in the Asian session prior to breaking down through the previous day's low on Friday heading into the end of the week. Monday puts peak formations up, 3 pushes up on day 1. Day 2 pulls back up into those peak formations, goes into consolidation for the sell-off to the low of the week. We get 3 pushes, 1 push, 2 push, and a 3rd push on PPI. This was probably the cleanest of the US dollar crosses, and then the second 15-minute bar inside begins the reversal on a smaller time frame. This was an excellent opportunity for a V-bottom reversal with a break in structure, but again, just not really what I would consider at this stage with the markets the way that they are, confident to position myself even into the new hour heading back through the high of the session. Gain gold still on the front side. I know some traders Took this opportunity on the news, an excellent 3-push pattern to the high on PPI. Again, the peak formation reset on Friday's low. The creeping trend, the 3 peaks on day 2, which is our Monday, down into the peak formation low for the reversal in the gap time, similar to the euro yesterday. And then the move back to the high of the week. Day 1 triggers new longs into the market, so we are biased to the upside. An excellent day 2 trend trade opportunity in the open of the Europe-London window. 7,500 pip move through the high of the week, staying in line in the bias of our already strongly trending markets. On PPI, we went vertical and took out the high of the week, the high of the month, with a 3-push 15-minute pattern before engulfing at 50. Major round numbers for the reversal back down. I know some traders took that. Probably the entry that I would have felt more comfortable with was the open of New York for the continuation squeeze for the 50 pip drop. Again, peak formations are back up after the news prior to the New York window. And at 9:30 New York time, we have our little 3 peaks and a little short squeeze headed right into the open, a long squeeze for a 50 pip blow off back through the low of the day. So coming back to what we talked about yesterday, we had a market that broke structure in the Asian window for the vertical move. We now redraw our consolidation, and we have a high-low London consolidation that went vertical down low, took out the high of the week. New York opens second hour. Peak formations are up. They've already taken out stops for the conservative short trade back through the low of the day. The trade I felt most confident about was the spot crude. Just the way that this market had set up. We took out the low of the week. We had day 1, day 2, day 3 on Monday to start the week. Day 2 takes out the low of the week. We talked about our consolidations in yesterday's video. Now we had breakout traders who were short at the break of yesterday's low, where we had this gap between the high of the day and the breakout level, which to me is a dead giveaway. They're trapping volume down low, and they'd already put in a peak formation. So we had our high and low consolidation. They broke out in London and reversed. We are then looking for the short squeeze back into the low of the week for the explosive reversal. Just going back to our consolidation, high and low. Asia sets the high and low of the day. We're in a nice tight range. London extends the range out, except that it breaks out and reverses and fails before we get into our US 12 candle window. So we have a market that has gone into consolidation. We have a breakout, peak formation low that reverses. That is taken out the low of the week and the low of the month. The next thing I'm thinking about then now is the first hour and second hour can set a high and a low. And oil is notorious for setting up for third hour opportunities. And in this particular case, news broke structure. So this higher high on the PPI blow off that gets traders shorting back down into the low of the week, breaks structure on the inside. That becomes our immediate first target. First hour puts a high in place. Second hour puts a low in place, and on the New York Open trades back down into the low. This 3-push pattern is just before the New York Open. New York opens and gets traders shorting into the low of the day, the low of the session, and also the low of the week, chasing the move down. It reverses and goes vertical. That move heads into the new hour. The new hour, the third hour now, begins the process of putting in a lower high back up to the high of the New York session. That traps traders trading short into the end of that hour. We begin the last 15 minutes. The new hour opens and reverses. This is the short squeeze opportunity. I waited for the entire session to be able to get in. My rationale was to get filled underneath of 50. If we go back and look at our 15-minute chart, Put our number boxes on there. We can take a look and zoom in. This is a 3-level drop. So we have 3 levels of drop from the high of the day, 150 pips. They've gone vertical and broken out of our initial consolidation, the Asia high-low, and reverse. That's the false break peak formation low. They come back inside of our original level from the Asian session and jam traders into the peak formation low. This is the short squeeze setup for an explosive reversal. We have shorts trapped down low, and you'll notice 1 push, 2 pushes on the New York Open, new hour opens, and a 1, 2, 3 right into the end of the 3rd hour for the explosive short squeeze reversal into breakout traders who shorted the market at the low of yesterday's low. So again, a bit of patience today. The markets obviously were in distended markets. We had news. I know there are traders that took the short trades at the high of the week, and some traders who went long at the low of the week. I like this market because oil tends to be explosive and again fairly predictable. We took out the low of the week, and the reversal, that this peak formation in the London session, that reversal setup seemed like the best opportunity for me on the day. Lock it in, get off the screen. Keep it simple, traders. Day 2. There's more news on the calendar this week, but we have some very large ranges built up in these markets. Great opportunities. Keep it simple, and may the markets go with you.